Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Coming up, David Morgan of the Morgan Report joins me to break down the madness in the markets, tells us why he believes this is 2008 Part 2 in the financial markets, and also addresses the major frustration over silver and when he thinks it will start acting like a safe haven and start to play catch-up versus gold. So don't miss a tremendous interview with the market insider who has decades worth of market experience, the man they call the Silver Guru, David Morgan, coming up after this week's market update. As cancellations, emergency restrictions, and panic selling of assets spreads, the global economy is at risk of grinding to a halt. We are already in the throes of the worst market mayhem since 2008. If the news on the coronavirus front gets any worse from here, we will be facing a once-in-a-century financial crisis and possible Great Depression ahead. That said, there are at least some reasons to be hopeful. The number of coronavirus cases in China and Korea appears to have plateaued. Warmer weather in the weeks ahead and more aggressive containment strategies may begin to inhibit the spread of the deadly infection in the U.S. and Europe. But public officials so far are failing to inspire confidence. German Chancellor Angela Merkel shocked the markets when she said up to 70% of the German population could contract coronavirus if more isn't done to stop its spread. And the stock market tanked immediately after President Donald Trump spoke to the nation Wednesday evening. Meanwhile, the response from the central bankers and the plunge protection team has so far been woefully ineffective. The Fed's emergency rate cut last week and its $500 billion expansion of bond purchases announced Thursday have done little to stem trillions of dollars in market liquidations as circuit breakers on stock exchanges get blown out. The tools central bankers have at their disposal aren't suited to the problem at hand. The Fed can address liquidity and solvency problems in the bond market and banking system, but it can't get consumers, workers, and businesses in the real economy to return to their normal activities. Government officials wouldn't allow a return to normalcy at this time, anyway. President Trump is contemplating invoking temporary new emergency powers, and globalists are eyeing permanent new power grabs to restrict our personal travel and financial freedoms. The World Health Organization is exploiting the coronavirus crisis as an opportunity to promote cashless technology. The WHO says paper cash may be spreading the virus and recommends people use digital payments instead. One of the virtues of silver-based money, by the way, is silver's antimicrobial properties. Viruses and bacteria that thrive on the surface of paper Federal Reserve notes are naturally repelled by silver coins. But the threat of the Wuhan virus spreading through common currency is likely to accelerate the war on cash. That's what trends forecaster and frequent Money Metals podcast guest Gerald Celente warned about in a video presentation earlier this week.
No paper money, you're going to spread them joims. We got digital dough for you. You think things are bad? And the market's going way down? Economy's crashing? Martial law, digital currency. And for me, I don't give financial advice. My gold forecast, match them anybody, anywhere in the world. I said the gold bull run began in June of 2019, June 6th, and that gold bull is going to keep on running as I see it. But think for yourself.
Although gold prices got pulled down on Thursday in the brutal wave of selling that hit Wall Street, the money metal this week is once again holding up much better than the stock market, commodities, and cryptocurrencies, believe it or not. As the Dow Jones plunged 10% yesterday alone, its worst day since the 1987 crash, Bitcoin crashed 26%. Gold suffered only a 3% drop, although it is dropping further here today. For the week, gold prices are down 9% to trade at $1,525 per ounce. Meanwhile, silver is getting obliterated and shows a 15.5% weekly loss to come in at $14.75 an ounce as of this Friday afternoon recording. Turning to the PGMs, platinum is taking a similar pounding as silver and is off by 15.8% this week to trade at $766. And finally, the once high-flying palladium market is crash landing down 31% on the week. Yes, you heard that right, 31%, to bring spot prices to $1,790. Another week like this in asset markets and a true deflationary spiral could take hold, with a wave of corporate defaults and bankruptcies coming seemingly out of nowhere. By this time next week, it's even possible the stock market and banking system will be shut down and some form of martial law imposed, as you just heard Gerald Celente forecast. The good news is that while deflation scares tend to be sudden and severe, they are ultimately short-lived. Deflation will never be allowed to persist for long while our inflationary fiat monetary system remains in place. The old adage, don't fight the Fed, is worth heeding. The last deflation scare in 2008 led to zero interest rate policy, quantitative easing, and unprecedented Fed balance sheet expansion. The Fed is set to do all that and more this time around, possibly even buying up shares in U.S. companies and monetizing Americans' tax bills. The current turmoil in markets and the central bank response will create generational buying opportunities in beaten down assets. Those who hold gold and cash will be the real winners because their purchasing power is dramatically increasing versus virtually everything else now on the chopping block. While Wall Street cheerleaders will scream about buying opportunities in U.S. stocks as they do on every down day, the greatest buying opportunities may be in overlooked markets such as silver. On Thursday, the white metal fell to a historically low discount versus gold as the gold-silver ratio spiked to 100-1, just as we suggested it might in last week's podcast. This extreme reading reflects just how stretched the deflation trade has become. While gold is often thought of as an inflation hedge, it is actually better viewed as a crisis hedge. Once the crisis fades and markets reinflate, other hard assets can be expected to begin vastly outperforming gold. At some point, and it could be any day now, the deflation-inflation dynamic will swing violently in the opposite direction. And when it does, silver is likely to be a prime beneficiary. Once a new bull market in silver and other inflation-correlated assets gets going, it can run for years. So as painful as the past month has been for investors, it sets the stage for the next great inflationary megatrend that will last for many, many months to come. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome back our good friend David Morgan of the Morgan Report. David, it's always great to have you on, and appreciate the time as always. How are you, sir?
Well, Mike, I am doing well personally, and the markets aren't, but I'm hanging in there, and thanks for having me on the show.
Yeah, definitely overdue, and great to have you back. Well, David, we are seeing tremendous volatility in markets. The coronavirus is getting the blame for a huge sell-off in stocks and an epic rally in bond prices. Commodities, oil in particular, are getting hammered. Maybe the only thing predictable about the recent market action is the Fed's response. They did another emergency 50 basis point cut, and a lot of people expect them to cut another 50 basis points when the FOMC meets later this month. What is your take on the turmoil, David? Is this a short-lived phenomenon, and will markets recover as soon as the fear around the virus dissipates, or are we looking at the start of something more serious, and maybe the bubble in equities has finally been popped?
Well, I think from a longer-term perspective, it is 2008 Part 2. Really, the fact is, after the financial crisis of 2008, where these banks stopped trusting each other and money actually stopped flowing, the Fed, right or wrong, came in and immediately exchanged this worthless or toxic subprime mortgages that the banks didn't want anything to do with, and ceased trading with each other, and replaced it with basically treasury bills, which is the sacrosanct debt that anyone would ever want, right? So it basically kept us from having a total meltdown. Obviously, it was a pretty big meltdown. Well, from that time till this, it's basically been quantitative easing, 1, 2, 3, 4. It's been Operation Twist. It's been buying the long end of the yield curve. It's been pumping money into the elite so they can buy back their stock and lower the float so that the price goes up and the CEOs get big bonuses. But the systemic problem in the underlying financial system really has not been addressed. So now we have more debt than we had before. We have probably more bad paper if you factor in not subprime, but you look at student loans, you look at pension fund problems, you look at interest rate swaps, you look at the derivatives market, and you look at the over-leverage in the stock market. We're probably set up for a bigger fall than we were in 2008, and that's the truth. So I look at the long term as 2008 part 2. From a short-term perspective, if we do get some kind of resolution on this virus situation, yeah, there'll be a relief rally. From a Fibonacci perspective, let's say the market ends up down 10,000 from top to where this virus situation subsides, and then it takes back and moves up 5,000, a one-half retracement. That could be a fairly likely scenario, but it hasn't fixed the systemic problem I just outlined, which means that you're probably going to get a further sell-off after that relief rally and continue down. I mean, what most people don't even realize is where we are in the United States stock market. So let me elaborate a little bit, Mike. So most markets go from undervalued to fair value to overvalued, or from overvalued to fair value to undervalued, and it has that cycle over a long period of time. When we had the 2008 sell-off in the stock market, and I think the Dow got down to I forget the number, 5,000 or something. What I do know is at that level, stocks were fair valued. They weren't undervalued. They were fair valued right there. So if we take whatever the inflation rate was from there till now and put a fair market value on the S&P 500 or the Dow or both, we've got a long ways down before we're fair valued again. We're still overvalued. So that's my take on the stock market, Mike.
Well, it does seem like stocks were priced for absolute perfection for a number of years here, and now we don't have perfection. We have an economic situation that's taken place because of the coronavirus, and maybe that's the straw that sort of broke the camel's back. Obviously, we got a lot of algorithms trading and these high-frequency trading outfits and machines and so forth, and it can get bad as everybody runs for the exits at the same time. It sort of builds on itself, doesn't it?
Yes, it does. And there's tangents that come off of it, too. You got the overall market, then you got how the gold market intersected. What does oil mean to the overall financial system? And, I mean, on and on it goes, Mike. So we are in my favorite expression I've said 100 times, interesting times.
Yeah, we certainly are. Well, switching the focus to metals, gold in particular has done fine. Obviously, silver has been sold along with stocks and commodities. Do you think we will see more futures markets selling, or will metals start to get a bid, perhaps because speculators anticipate some safe haven demand and start buying futures, or because the Fed is pulling out all the stops on stimulus, or both? The U.S. dollar is not looking too good here. It's been falling in currency markets despite the turmoil. Let's get your thoughts here on metals and how they're reacting to things.
Sure. Well, gold is doing its job. I mean, gold came off a bottom of December 2015, and it's up from that level, and it's worked through the 1350 levels, finally made a 6-year high, hit the 1550 level, which is resistance, worked through that. We're up at $1,700 gold in U.S. terms in the aftermarket just a few trading sessions ago. So gold is responding, gold itself, not gold stocks. And sure, it goes up, and it was down, $60 in one trading session a Friday, a week and a half ago, or whatever. And then by the next Friday, it had taken back that $60 it had lost. So these are very volatile markets, and gold, especially the gold equities, are about the highest beta stocks, meaning beta, ladies and gentlemen, just means how volatile are any given set of stocks. What do they do? And the gold stocks are notorious for big moves up and down. So anyway, gold's, I think, doing quite well, and it's signaling us that there are more people coming in the gold market seeking a safe haven, and gold's the answer for right now. Silver, on the other hand, has gone to the 100-to-1 ratio, which it's only done a couple times previously, and that has signaled a financial crisis in the past. So obviously, I'm believing it's signaling the financial crisis, which we're probably in right now. So it's done its job there. As gold becomes more and more of a safe haven, and there's more price pressure in gold, and the gold stocks start to recover, I think you will see some people starting to move into the silver market. I mean, this gentleman, Scott Maynard from Guggenheim, who is their main investment advisor or authority or the chief investment, I guess, officer, I don't know, such a term. He was asked at Davos by some financial news reporters from Bloomberg what was his go-to trade for 2020, and he said silver. And Bloomberg gentleman kind of rocked it on his heels a bit, said, silver? Why not gold? And Mr. Maynard said, because gold is pretty near its nominal high, but silver is about 65% off. And silver is an undervalued asset. That's pretty close to what he said. And then the reporter went on to ask him, he said, he didn't say silver, but do you think the metals could perform like the non-precious metals have recently? And what he meant by that was, could gold and silver perform like palladium? Even though, in my view, he misstated it, it was well understood what he meant. So he's saying, these other two metals, can they perform like palladium? And Scott said, I think there's a high likelihood of that. So there's a guy that's managing a lot of money, because I looked it up. In fact, I wrote about it in the Morgan Report 2 months ago. The amount of money that, if they devoted to the silver market, could certainly have a huge impact on the paper price of silver. I mean, I'm going to digress a bit further, Mike, if you don't mind, but if we look back in history, when Buffett bought in 1999, he bought almost 130 million ounces of physical silver, and it took the market up from about 5 to about 8.5, which didn't double it, but moved it quite a bit. And when he reported that year, I got the Berkshire Hathaway annual statement because, it's part of my job to report on the silver market, and the word silver never showed up. Are you kidding me, David? David Morgan, silver didn't show up in the Berkshire Hathaway, and he bought 130 million ounces of silver, about 25% of the supply. Are you kidding? And the answer is, I'm not kidding at all. Because by law, if you are a company like Berkshire Hathaway, we're an investment company basically, you only have to list out in detail anything that's greater than 2% of your asset holdings. And since that amount of silver was less than 2% of what Berkshire held, they just said they made a miscellaneous purchase, and the miscellaneous purchase happened to be 130 million ounces of silver. So I think that gives some people an appreciation for how small the silver market is, and there's somebody as smart as Scott Maynard, and I mean, he is. I could go on and on. Let me just say this. When I heard his interview, I go, well, that guy thinks just like me, so either we're both smart or maybe we're both missing something. I'll say it that way. But very interesting. So I circled into gold. Gold's doing its job. Silver is lagging. Silver will come back. Silver is a precious metal. Silver's acting like it's only an industrial metal or a base metal. It's doing absolutely nothing, disappointing everyone. It's been there before. It's done that before. I'm just so old. I know that from my own experience. But it will come back as a safe haven asset again and as a precious metal. So, and it's a spike. I mean, these 100-to-1 ratios usually don't last 10 years. They're a momentary thing on a chart. It might be a month, might be two. I don't know. It's more likely going to be about a month and a half or so, but we'll see. But normally it don't last long. So we'll see silver start to outperform gold and go from 100-to-1 to 90-to-1, 80-to-1, 70-to-1, and we'll see what happens. But it's tough. It's tough on silver holders. I know that. I'm one of them.
Yeah, 30-to-1, we saw that, or 32-to-1, right in that ballpark less than a decade ago there in 2011. So those days are not too long ago, and certainly could happen again as silver does outperform. Eventually, you have to think it will. Well, speaking of silver, David, man, it has such amazing uses when it comes to antibacterial and antiviral applications. Pretty important metal at a time like this, isn't it?
Well, it is, if you don't mind me saying it, Mike. There is a way to take a look at that. If you go to what you do is you type in themorganreport.com, which is my URL. It's all one word, themorganreport.com, and then you do a /silverwater, all one word, SALVERWATER. if you do that, you will find an interview I did years ago in Salt Lake City with two doctors, and they will give you, you see the interview, and you can make up your own mind what you want to think about silver's properties, but it was a pretty interesting interview, and I saved it basically for those that are interested in structured silver water and what these doctors have to say about it.
My wife has been breaking out the colloidal silver here of late as we try to sanitize things and obviously just sort of practice good hygiene, especially at a time like this. Politically...
Let me interrupt you there. Sorry, but, there is pretty, I think it's a legitimate report that the Chinese in some areas were taking, one of these spray can things, and it was basically a company from the United States that produces the silver water that is a biocide. Silver is a biocide. That's a fact, people. And they were using it as a spray down mechanism to basically sterilize the areas from this virus situation. So, maybe there'll be more of that in the future. I don't know, but I thought it was pretty interesting that even the mainstream news mentioned it, that was being used. And I've said for years, if you really want to keep the public health at a better level, you would use, nano silver. We're not talking an ounce of silver on a doorknob. We're talking just, pennies worth of silver, but you need to do every doorknob at every public facility, every airport, every school, every church, every corporate building, every government building, everything else. It would add up. And you can use copper. Copper's pretty good, but silver obviously is the best. So is that going to happen? I doubt it. But the point I'm making is that it's that important if you want to keep bacteria at bay. And the higher-end Japanese cars put silver in their steering wheels. So when you're holding on to the steering wheel, you're basically, no matter what's on your hands, you're not going to carry any germs.
Yeah, pretty interesting and amazing uses in silver for sure. Switching gears here a little bit, David. Politically, you got to think the potential economic meltdown here could put Trump at risk. Seems like things a couple months ago looked like Trump was a certainty and was very safe for November, but maybe now he could be falling victim to an economy spiraling out of control, which seems like maybe the only thing that could derail his election bid. Any thoughts there?
No, I agree. I don't really have much to add, Mike. I think you hit the nail on the head. Every election's pretty economically dependent. The old Clinton, who I'm not a big fan of, but he was president for 2 terms. It's the economy, stupid. I mean, it carries a lot of weight with a lot of people, and you said it. I mean, it's possible that if the economy gets quote-unquote destroyed, I don't want to be too panicky here or talking hyperbole, but it is a concern, and it could be enough of a concern if people say, next, let's vote in. Who knows? I won't even say it because I am equally distrustful of the whole political class. But regardless, someone's going to fill that vacancy or Trump will get reelected. We'll just have to wait and see, but you make a great point.
Yeah, it's going to be very interesting to see how that develops throughout the rest of the year and what kind of blame, I guess, he takes. He has taken ownership of the stock markets in the past, and that could end up being to his detriment, maybe. We'll find out. Well, as we begin to wrap up here, David, any parting words for folks here today as we are looking at some serious tumult in the markets and in society as a whole? Any comments to share with us as we close?
Yeah, one, I think, is stay calm, don't panic. The human species is quite adaptable, and we've survived almost everything. But I want to move on to a different topic, and that is this. I've been getting more and more correspondence, communications with people that are worried about, the next bail-in. And you cannot basically go to your friendly local banker and say, hey, I've got $100,000 in my bank account, and I'd like to cash it out. They'll tell you to stand in line, sign a form, take a thumbprint, get 3 photos, and you can get $5,000. And you got to wait a week for that to happen. So if you really want to move some of your savings out of the bank and into your own hands, the best way to do it is to invest in precious metals. And, I obviously favor silver and have for some time, but if the 100-to-1 ratio, I wouldn't say go all in on silver. I think you should own both, and I've said that basically from the beginning. However, it's a good way to cash out pretty quickly. You just find a trusted dealer like you have there, Mike. I've known you and your brother for quite some time, and I've never heard of one complaint. I'm sure there's always a disgruntled somebody somewhere for something, but regardless, it's one of the best, and I don't recommend very many, as you know. So I would say if you're out there listening and you're worried about having too much cash reserves in your bank and you think this next bail out, which is now against the law, will be a bail in, which is in the law, and you have a lot of cash at risk in a bank, you might consider moving some of that through Mike and Stefan and whoever works there to get this precious metal into your own hands. And if you don't want to hold it, they have a storage facility right there in Idaho that I visited as it was being built. And I'm not big on storage really, but there are cases where it makes a lot of sense. And that's one, again, I would vouch for. So, Mike, there you go.
Well, thanks. I didn't put you up to that, but certainly appreciate the kind words. And, it means a lot to us coming from you, and certainly appreciate it. Well, good stuff. It's always a pleasure. Always love getting your insights. And before we let you go, of course, we got to have you share with the folks about the Morgan Report and how they can get on board with your great service and the information that you put out there and how they can follow you more closely.
Sure. So the easiest thing is get on our free newsletter list, which is themorganreport.com. And then we have a paid service. You can go to the subscribe tab, pull down, and watch the video and read. And I'll just repeat, if you're interested in silver biocide properties, just type in themorganreport.com/silverwater, all one word, SALVERWATER, and you will see a pretty big set of videos that I did years ago interviewing two doctors that are extremely familiar with what silver solutions can do in the field of biocidal properties that can do everything from like decontaminate your floor, the air, whatever, to health situations. So if you're interested, go for it. If not, then don't. It's that simple.
Well, thanks again, David. All the best to you. Strap on for what is likely going to be a wild ride, and we'll look forward to having you back on here in the not-too-distant future. And in the meantime, we'll be following the great stuff you're always putting out there at the Morgan Report. Thanks again for the time, and have a great weekend, my friend.
You betcha. Take care. Thank you.
Well, that will do it for this week. Thanks again to David Morgan, publisher of the Morgan Report. To follow David, just go to themorganreport.com. You can also follow him on Twitter. It's at SilverGuru22. And if you haven't already, grab a copy of his book titled Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, which is available at moneymetals.com and other places where books are sold. Be sure to grab a copy of that today, and then check out themorganreport.com and start getting his wonderful commentaries on a regular basis. And don't forget to check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.